e-gaming. Let's see what the final word is. In fact, let me welcome in Rajesh Agarwal, Head of Research at AUM Capital as well. Rajesh, good afternoon and welcome to the show. How are you looking at the gaming companies, especially Delta Corp, taking into consideration the pain with regards to the taxation issue?
Good afternoon to you and our viewers. Thank you for calling. As far as gaming companies are concerned, we are not that excited about the recent step they have taken to get a stay on the notice. But going forward, we think this tax issue is going to crop up sooner than later. So it's better to avoid at this point of time until some clarity comes up. If somebody is holding, they can continue to hold with a strict stop loss because there are risk factors associated to it.
All right, so that's the view coming in on the gaming counters. Moving on from gaming to the IT space, Tata Tech signed a memorandum of understanding with Telechips. Rucha joins us with more details. Rucha, what do you have?
Thank you. So Tata Technologies is buzzing in trade on the back of news as it has partnered with Telechips to make software-defined vehicles. Now, what will this collaboration actually do? Number one, it will focus on co-developing innovative solutions for advanced driver assistance system, often called as ADAS platforms. Will also help for automotive cockpit domain controllers and central and zonal gateway controllers as well. So these are the products which will be in focus after this. This will eventually help the OEMs, that is original equipment manufacturers, to address the software hardware integration challenges and also reduce the time to market. But how will this partnership actually leverage Tata Technologies? Tata Technologies' deep expertise is in the automotive software engineering space, and this integration would ultimately leverage Tata Technologies' expertise over here and also allow for integration of next generation technology, especially for turnkey SDV development. The Telechips semiconductor technologies actually focuses on AI vision, ADAS, as I mentioned, the processors over there, and also network gateway processors. So all this is ultimately beneficial for Tata Technologies, but if we go back and have a look at how the stock has performed, well, down about more than 10% in last 6 months, and if we have a look at the last 1 year story, down about 24%. So definitely underperforming since its IPO over there, but we'll definitely see if Tata Technologies leverage this kind of position and come out with more orders as well.
Thank you so much for breaking that down for us. Rajesh, the partnership seems to be, an attractive one, but the stock has not done much since IPO, as Rucha rightly mentioned. What do you make of this partnership? And secondly, what are your views on the counter?
I will take it on a different note. I would say that our views are very positive on this company, despite the fact that it has underperformed the market, as your colleague said, but we are very positive on this. And we are have a projections of around 1,050 odd rupees in the next 9 to 12 months. That's our projection from this. This partnership is going to do very well because, as we all know, that this company is into auto software, and previously a major chunk of the order used to come from Tata Motors itself. That was the group company. Now not only they have diversified their product portfolio, but their client profile too. So that's going to help this. Management is very good. Order inflows are very good, and the kind of changes we are seeing in the auto space as such as a whole, I think this company is going to do well. And despite the strong fundamentally, it has not performed, and that's going to catch up in the next 9 to 12 months if the market goes well. So one can buy at these levels with the counter has very low risk profile, I would say.
Right, so that's with regards to Tata Technologies. In fact, SDV is almost a $300 billion industry in the next 2 to 3 years. That is what a lot of research reports are indicating. But moving on, we have Rucha, who's still with us on the back of a she's actually doing something on Polyplex Corporation. You have Phillip Capital, which has initiated a buy on the counter. Rucha, why is Phillip Capital positive on a Polyplex Corporation, and what are they indicating?
Definitely, Phillip Capital, as you mentioned, is very much positive because the target price it has given is 1836 rupees, implying an upside of about 40%. And mind you, this is an initiation note. Therefore, it mentions that industry, it has done a deep industry analysis as well, which states that this industry can stand to gain from a stable demand with no upcoming capacity in the near future. So all this could also aid margins. Now, talking about the kind of expansion in domestic as well as international market, this one is expected to reach 70%. Like domestic is expected to reach 70% and international expected to reach 71% of the total installed capacity. It is also therefore anticipating revenue addition of about 19 billion rupees over the next 3 years, that is till FY27. This can also be supported by increasing volumes for the company. Talking about margins, well, on the EBITDA front, it anticipates 13% margins for FY27 as against the current 14 to 15% margin average, which was there over the last 10 years. Let's look at the stock price performance. Well, this one got listed in January 2024. That is almost 1 year back from here on, and it is up about 24% since then. But 40% upside from here on is what Phillips Capital believes the stock will have.
Right, so that's with regards to Polyplex. How are you looking at Polyplex, Rajesh?
It was one of the best performing companies, I would say, 2 years back. If you look at the data and all, it was trading at around 2000 plus levels. And then the entire industry faces problem, and not only Polyplex, but other peer group companies show a massive correction, not only in market cap terms, but also in operational terms. Some of them reported losses too. This was one of the company which used to give dividend every quarter. Now, packaging film as an industry has started seeing a turnaround. This company has not only expanded its product profile, but is trying to reach to more global destinations. We think this stock can go to around 1800 odd rupees in the next 1 year. We have a buy call in this.
So buy call on Polyplex from Rajesh is the view coming in. Moving on to a different counter, we had a chat with Rajiv Gupta, CEO of NTPC Green Energy, on their new 1 gigawatt capacity plant, which was bought out by the Uttar Pradesh government. Listen in to a slice of that.
This project we have won in an auction, which the UP government had taken out, and we have won a 1 gigawatt capacity here. And the timeline for this is 24 months from the date of signing of PPA, which we expect is to be completed in the next 60 to 90 days. So all that is already tied up. We are going to execute the total capacity in 2 solar parks, which we have being developed by TUSCO, which is a subsidiary of THDC, which also happens to be one of the subsidiaries of NTPC.
Right, so that was the management of NTPC Green. If you can pull up the chart of NTPC Green since listing and see how it has performed so far. Rajesh, your view as to how the counter is doing and what's the way forward for NTPC Green?
I would say phenomenal return it has given after the IPO to investors. And we still believe that is in the long run can give very good return. In the past, recent past, it's made an entry into nuclear power with Parmanu Urja Energy, which we are signing a JV with a subsidiary. And everything is going in favor of this company, and with the focus of government in green energy and all, long term looks very good. Although in the medium term, there might be some amount of consolidation because of the kind of run-up it has seen post-IPO. But for a long-term investor, one can buy this. Recently, the stock has seen some kind of correction, and this is an opportunity to buy, I would say. 1 year price target may be in the range of 160 to 175 rupees.
Right, so that's with regards NTPC Green, a positive outlook coming in on that one. But moving on, you have a Dr. Reddy's is in focus. 2 reasons why the stock has been buzzing in trade. It's up almost 1.5%, cooled off since opening. But 2 reasons that we're picking up right now is the Nuvama upgrade, and their arm has sold their US manufacturing unit. And these are the 2 reasons that we're picking up so far. My colleague Puneet is standing by to get us more. Puneet, what is Nuvama indicating?
Well, thanks for that. So, they have upgraded the stock to a buy from a reduced rating earlier and have given a target price of 1,553 rupees per share, which is almost a 15% upside from the previous close. Now, the management has mapped out strategies to mitigate any kind of risk from the loss of revenue coming from Revlimid. Now, post the pandemic, they had gotten a lot of revenues from this particular drug. So, coming off that, it's going to be some loss of revenue, but the company has mentioned to its investors that the strategy is fit to, have revenues from other sources as well. The company has mentioned that, for Revlimid, it almost contributed 40% of the company's EBITDA in FY24, and they have mentioned that, R&D spend would decrease, in FY27. So next 2 years, it's expected to be some R&D increase and maintaining that kind of momentum, but FY27 should see some of that coming off, which will impact margins in a positive way as well. And the other aspect is that, key asset launches is something that the company has mentioned to its investors as well to fully offset any kind of revenue impact. That's what they mentioned. And 80% of the EBITDA losses is also, of course, from the expiry of the patent as well. But they have strategically planned out other launches for the same. So they have, Nuvama has raised their FY27 earnings estimate by almost 15% and valuing the stock of at about 24 times price to earnings on an FY27 EPS basis.
Thanks, Puneet, for getting us the details. In fact, in a separate development, they've also announced that their wholly owned US subsidiary, which is Dr. Reddy's Laboratories Inc., has entered into an agreement with Jaguar Labs Holdings, and this is to sell all issued and outstanding membership interests of the subsidiary, which is based out of Louisiana. It also includes the manufacturing facility in Shreveport, Louisiana, that will be sold for a nominal consideration of $1. Overall, Rajesh, how are you looking at a Dr. Reddy's? And apart from that, your view on the sector?
It's a strong company. Despite that, the entire sector has underperformed. Dr. Reddy's underperformed the market, but going forward, we are very bullish on pharma sector as such. And in fact, if we talk about Dr. Reddy's Lab, the kind of strategic investments this company has made into new markets, introducing new therapeutic products are very good. And recently they have announced the new biosimilars being launched in US markets, new products being launched in Canadian markets. These are positives going forward. We have a price target of 1,550 rupees in the next 1 year. So any dip should be taken as an opportunity to accumulate.
All right, shifting focus to the auto space, Mahindra announces the prices for its latest EVs. Puneet joins us with more details on that as to how Mahindra priced its latest launches and how does it compare to its peers. Puneet, take it away.
Well, thanks for that. So they have announced the pricing of the Pack 3, which is essentially the higher battery, offering a higher range for both the BE6 as well as the XEV9e, which is the electric vehicle cars that they've launched back in November. Now, they have mentioned that it has range of about more than 600 kilometers in the affordable category range. It can't be called affordable, but the 18 to 26 lakh range. They have mentioned that the top variant of the BE6 will be priced at around 26.9 lakhs, while the top variant of the XEV9e will be priced at almost 30.5 lakhs. So they are offering a better range and a higher battery, but of course comes with a cost. Apart from that, we just did a comparison with that and the listed peer Tata Motors and its launch of the Curve. And it essentially says that because, there's a clear difference in pricing, of course, but that's also led by the battery ranges as well. So, the M&M BE6 as well as the XEV has a higher battery of 59 kilowatt in the base variant and a 79 kilowatt battery in the premium and the Pack 3 variant, which we spoke about. While on the other hand, for Tata Curve, it's around between 45 kilowatt hour and 55 kilowatt hour is the battery size. That impacts the range of both these vehicles as well. So for the range purposes, for the BE6 is almost about 680 kilometers, while the XEV is around 656 kilometers of range on a full single charge, while that for something like a Tata Curve is around 500 kilometers as per tests conducted by the agencies. The other aspect is that in terms of targets from brokerages is another factor to look at, because Nuvama is estimating roughly 48,000 vehicles to be sold by someone like a Mahindra and Mahindra in FY26, which will only be electric vehicles, and that's close to the target that the management has also given of about 5,000 vehicles per month starting FY26. In comparison, Nomura is expecting for Tata Motors to have roughly about 72,000 vehicles to be sold in this particular FY25, and that will subsequently be increased to about 1 lakh vehicles in FY27. So despite being a late starter for Mahindra, they're able to catch up to the targets of something like a Tata Motors as well, while we have seen competition from the unlisted players such as MG Motors being one of the key ones, which has the number 2 market share in terms of electric vehicles. Finally, in terms of valuation, what's also important that both these companies have raised capital specifically for the electric vehicle venture. which might eventually list going forward in the future as well. For Tata Motors, based on their previous fundraise, the company is valued, the electric vehicle arm is valued at about $9.1 billion, while Mahindra is valued higher at about $9.8 billion. And for Mahindra, we are expecting the company to have a certain fundraise as well. They've already mentioned that BII will be investing 650 crores over the next few months in the company, and over the next 3 years, the company is expected to invest 12,000 crores only in the electric vehicle arm, while they're also investing 15,000 crores in the petrol variant as well. So overall, both these are very close to each other in terms of competition, but Mahindra seems to have cracked the premium car market with its extra features and of course with the valuation as well.
All right, so Puneet, thank you so much for breaking that down for us in such a detailed manner. Rajesh, I'll come to you on this one. How do you perceive this new pricing for Mahindra EVs?
Your colleague said it right. Although it's termed as affordable SUV, 25 lakhs is not at all affordable, I think, for a general public. But still, it's very exciting news. It's on the features are as good as Land Rover, I would say. I've seen the details. And Mahindra as a company is not only a play on passenger vehicles, but farm equipments too. And in the recent management conversation, I have heard through media that they are going to scale up their international business with their existing distribution channels, which they already have. They have moved into EV in a big way, and that's a big positive for the company. But at this time, I think the valuations have already discounted all the positives. If it falls by around 5% from these levels, that would be a good entry point for Mahindra and Mahindra. For long term, it's a good buy in auto pack.
Right, so M&M, a good play in terms of the auto pack as well. But let's quickly pull up the markets. You're seeing a sharp recovery as we speak. Let's pull up Nifty, Bank Nifty, Nifty IT index as well. There you go, from the day's lowest levels. We've hit a good high, though not in the positive yet. Nifty IT as well is now nearly at the day's highest levels. We were down almost, 23,650 is what we've already touched. We've hit a high of 23,751. So we're just almost 100 points away from the day's highs right now in terms of Nifty 50. Overall, if you go to see, we are not trading below 23,600. So that's the topic that we need to correct as well on the screens. But clearly, if you see in terms of Bank Nifty, let's pull up IT, FMCG, oil and gas, because as we were mentioning, these two sectors were absolutely important with regards to where the recovery goes. There you go. You have the FMCG index, which is at the day's highest level, so contributing absolutely to the recovery. Oil and gas also near the day's highest levels, contributing to the recovery. And let's just pull up mid-cap and the small-cap index as well and see, because there was underperformance as compared to benchmark indices, ruling under pressure still. Small-cap 250 at the day's low, and the mid-cap 150 also at the day's low. It's the benchmarks that are seeing a good recovery. But staying with the markets, and you have a Paytm that is in focus. So if you're looking to play the India payments theme, Paytm might be the stock to go after. And that is, according to Bernstein's senior analyst, Pranav Gunlapale. The stock, though, is down 7.5%. Let's first hear him what he has to say.
See, I think for Paytm and the overall payment space, what we are seeing is a pickup in the payment margins. I think both a stronger volume growth on the UPI front and a stabilization or maybe even an improvement in payment margins is what makes us bullish. And secondly, specifically for Paytm, I think once, if we are to assume that the asset quality troubles bottom out, then Paytm becomes a better way to play that theme, because they will be direct beneficiaries of a pickup in the lending disbursals versus, say, a lender like an SBI card, where one would need to wait out for the credit cost impact to play out and then see an earnings rebound. The pickup in disbursals will show a lot faster, a lot more cleanly in the case of Paytm, and hence our preference for Paytm over SBI cards. And even the longer term, we are more bullish on UPI platforms compared to monoline credit card business.
Rajesh, we just have a buy or a sell answer from you on Paytm because running out of time.
The sell from our side because of the loss of the market.
So a sell coming in with regards to Paytm, but completely out of time. Thank you so much for joining us on the show. It's a thank you from Mahima, the team that put the show together, and myself. In fact, lots more lined up.